Hello everyone, welcome back to the weekly review and forecast. So first things I want to do is go over the trades this week and what I thought about this week, how I did. We're pretty much almost done the month, so I'm going to do a more thorough monthly review on the whole month soon. But as for this past week, we said at the beginning of the week it'd be a bit of a calm week. There was only news on Thursday, and because it wasn't really a news heavy week, I was kind of more lenient on trading more as the opportunities came. But Wednesday was the only trade that won, and it was paired with a new week opening gap or new day opening gap. And then Friday I did trade because the markets I thought there was high impact news, consumer sentiment, which here it says it's orange news, but sometimes it can be high impact, I'm pretty sure. I don't know if on TradingView it was, I don't know, it doesn't look on TradingView it's high impact either. But you can only really judge by looking at the price action. And to be honest, I don't know. Point is, I assumed it was high impact. So I did take this trade, and then I broke even my stop, and I'll explain why I broke even my stop. So I didn't lose any money on that trade. And then there was Wednesday's trade, which won, but this is the frustrating part. So I took this short, I entered short, and I cut the trade off early before it went lower. The reason I cut it off early, as you can see here, I accidentally entered into a long, like I pressed the buy button up here instead of the sell button. So I was on the wrong side, and then I immediately reversed it. And though that's not even what I did wrong, like that would have been fine if I just did that by mistake and immediately reversed it. It's not like I didn't notice or anything. I noticed it right away. Like I accidentally clicked buy and I switched it. The problem was my position size wasn't set, and so the whole reason this happened is because I rushed into the trade. I wasn't taking my time, and at first I entered at the low. So if I go on the 1 minute chart, no, I entered here on the low of the gap, when the smarter entry would have been down here because I wasn't really seeing price wanting to go all the way to previous day low. And whenever there's a large gap like this, if it's better for the risk taking to get in halfway, then I always do that. So like, I was in a Google meeting and wasn't fully paying attention to the chart. When I saw the trade start to form, I wasn't even logged into my trading account, and I had to rush in to get into my trading account. Set up the trade, start the recording, draw out what I'm looking for, confirm that it really is there and I'm not just tripping, and then set my risk. And when I set my risk, I always kind of measure my stop, and then I think about, okay, I want to risk around $300 to $400. How much? How many micros do I need to put on? And so I didn't think, and I just got in with five. The position was set at five. I don't know if I have the recording actually. Should look for the recording because I'm pretty sure this was on the 25th. I might have deleted it. Oh no, looks like I do have it. It's almost 2 minutes. I have two recordings on the 25th. No, this is after. I don't know what happened here. Okay, well, these are both recordings after that happened afterwards. So I guess I don't have a recording. Maybe I didn't save the recording. So point is, I didn't measure my risk well, and when the trade got to around 515, I closed it right on that candle because it exceeded my sort of $300. It was at $300 a loss around there, and the full risk was almost 500. And because I rushed into the trade, I wasn't sure. This wasn't like an A plus setup. The only thing that was holding me back was this candle right here. There was an up close candle in between down close candles. I seen that and I was like, whoa, I'm not so sure about this. and it kind of made me hesitate on taking this trade. Um, but it was new week opening gap. Technically, was a sweep for price swing. I also like this sweep. I believe this was like the initial sweep, and this was just a continuation. So you can see how it went lower and then it immediately went back up and continued kind of moving sideways until the next day it dumped. So very kind of inefficient. You really have to be precise when you look for trades on days like this where we transition from going higher to going lower. But it is what it is. I watched it work. I didn't gamble. I didn't try and revenge trade. But one thing, interesting thing I did find recently, and I'll maybe talk about this more in the monthly review, but I started being a lot more discretionary when I backtest now. I'm starting to kind of backtest a little differently. I'm now backtesting going forward instead of backwards. So I'm playing out price action and I'm anticipating the setups. And I'm trying to figure out, okay, real time, do I think I would have taken this? And I'm trying to find patterns between losses and wins. But one thing I realized on losses that happens often is it's not in alignment with a higher time frame. So what I mean by that is it doesn't mean that there won't be longs, but sometimes the higher time frame wants to go up and there'll be longs, but you might take shorts inside this phase, and then it loses. But one good example is this week here and on Friday. So if I just look at it from a 15-minute chart, I don't want to spend too much time here, but just real quick, when price is making higher highs, it's easy for it to go up. But when it's failing to make higher highs, like it made this high right here, then it's tried to get above it at 4 a.m., then it tried to get above it at 8 a.m., and it's failing to get above it, or it's very shallow. The run on the previous high, very, very shallow, kind of like relatively equal highs. It starts to decline it. That's when order flows wanting to go more lower. And compare how it looks on the downside. You see how like right around 8 a.m. we get above a new high. We're very shallow, but look at how excited and how far down we go after taking this high. We're much more excited to go lower than higher. And so this is why the better setups here were to go short. I mean, shorting here would have been easier than taking a long here off this sweep. You would have had a lot more chop, and potentially it reduces the odds of winning trade. As far as Tuesday goes, there was a sweep here that was I kind of like, but you can see how we're moving sideways. This isn't really. It's failing to go higher too overnight, relative equal highs, and you can see how very shallow that run is. It just moves sideways and accumulates all night long until it kind of manipulates above it, or not all night, all night afternoon long. So there was nothing really to do Friday despite the high impact news. Monday, this happened. I don't know where Trump said something, and basically this is what I'm going to talk about next. But the situation over there, and then real quick, I just want to show Friday another kind of example what I'm talking about when I say higher time frame alignment. But here it's very clear that price wants to go lower. It's not going above these highs, previous day session highs like afternoon high, morning high. It's staying far away from it. It's gapping lower on opens for regular trading hours. And we're continuously pressing, making lower lows, not making higher highs. So when we do eventually make a higher high on the mini structure, very quickly we decline it. So I'm looking at this as a sweep, right? Potential sweep. It is the model. There is, at least I assume there was high impact news, Michigan consumer sentiment, and I'm looking to go long, right? So, very quickly I broke even my stop because I looked before even 9:30 open, before the blue area even happened. I told my fiance like around 9:05, like, yeah, I don't think there'll be a trade today, because first of all, it's not going to go back up, pull back, and then short on a Friday. I wouldn't want to take a shorting setup after it pulls back above midnight open, which would be near the high of the day. And second of all, I don't trust it going long because it's very heavy to the downside, refusing to make higher highs, right? So, avoid higher highs. I mean, like on a bigger time frame. Don't worry about the mini structure. But anyways, done with that. There were some tweets. I guess this is just like my thought process. I said I'm open to longs early in the morning, but price has sustained consistent downside overnight, so my expectations are low. And then I placed a limit order. My stop is break even. It's Friday. We had heavy downside. I don't want to hold on to the trade if it comes back to entry. I did that right at the high here. We inversed this gap and then went lower. Out of break even. It is what it is. I think I had some more tweets on Tuesday because Tuesday was the biggest news and I was like the most focused then. We're making lower lows so far this morning. Price looks like it might open an attempt to move to London lows. It did exactly that. It opened at 9:30, moved down to London overnight lows, slipped that, and then I was kind of locked in here. I was really wanting to trade. We're seeing rejection from this week's new week opening gap. We'll need to see opening price action to try and determine a bias because I wasn't really sure. I seen this new week opening gap, so this is like the Sunday opening where it opened on Sunday and closed on Friday. So we kind of like had been finding support in this area for a while now. So since the overnight, and then back in the morning, and I wanted to see, are we going to consolidate around this or are we going to move away from it very quickly? None lows are taken, but I'm not qualifying the sweep 925 candle at low, 930 candle high because it's too choppy. Basically what I said, I looked at all the candles 905 and considering how we rejected a 50-minute bearish value gap, which is right here, and there was an hourly structure, kind of like an order block, to this whole price action that created an order block on the hourly chart. And so I was just seeing heavy downside from bearish PD arrays and the willingness to make much lower lows inside the overnight structure. And so I wasn't sure about going long, just because how choppy it was. It didn't look excited. Then I said, not surprised to see today choppy. Pretty much all markets look the same for the morning. And also, this is also not surprising because this is when I'm going to talk about geopolitics now. But with what's happening in the Middle East, after Trump on Monday, basically what he came out and said is that he's not going to attack Iran. He's not going to go for their energy infrastructure. He's going to wait. And that they're starting peace talks. Okay, so the markets had an initial reaction. Now, this doesn't mean anything. And the markets kind of initially took this in. Maybe some players took action. And then the markets kind of just said, okay, now what? Now what do we do? Nobody knew. They were waiting, I guess, for more confirmation the peace talks are continuing. But at the same time, throughout this entire day, strikes continued. Israel continued strikes on Lebanon and Iran, and then Iran continued sending missiles. The key thing that started changing more towards the end of the week, so like Thursday and Wednesday, is it's true that the strikes, I suppose, reduced in number and volume. Like there were much less missiles, especially because the U.S. isn't participating as much. The only thing is though that the missiles had more intent behind them. So the now Iran is targeting very specific locations that have to do with infrastructure. So like water sanitation plants. They're targeting oil rigs. They're targeting specific oil carriers. Not just random buildings or military bases or whatever. Maybe important military targets. Like the missiles that they are sending are now very precise. They're meant to cause a lot more destruction and harm. So even though Trump is coming out and saying we want to do peace talks, we want to have peace, the markets are obviously seeing that. Well, not the markets, but what the reality is, troops are still getting deployed. Things are still getting worse. And there's a lot of things to be said in the media. Maybe they are having peace talks, but these talks aren't going maybe that as well as maybe the Trump would like to admit. I haven't really heard what he said about the peace talks. I doubt he said anything. But from what I've heard on both sides is that the United States wants something that would mean Iran gives up all of its defense. So its proxy groups, it gives up its nuclear program, it leaves the Strait of Hormuz open permanently. It basically gives up all of its cards for its defense. Because remember, Iran can't sell oil in US dollars, and they're surrounded by, they have the Strait of Hormuz, they're surrounded by trade route, a very important trade route. And so they hold a lot of leverage and they don't want to get strong arm. I think it's very important for Iran to be able to defend itself. So their insurance policy, I suppose, their the way they defend themselves is by funding different proxy groups in the Middle East to work for its interests, and then also its nuclear program is like a threat. I guess they can keep that ongoing, being close to having nukes as like a bargaining chip or an ongoing threat, or to kind of deter. Instead of actually having nukes and making things worse and getting other countries to have nukes, they're like using the fact that they're close to having nukes as a deterrence. And the United States is basically asking them to get rid of all that and give that all up. Now, is that going to happen? Hell no, I don't think that's ever going to happen. What the Iran wants at the same time, I don't think it would happen. Maybe some parts of it, and on both sides, and this is why they're negotiating. But so far, like the terms, the initial terms that both sides set, is never going to happen realistically. Like they're basically asking the United States to pay for damages, say they're sorry, they shouldn't have attacked, and a lot of these things that would just wouldn't happen. So their oil at the same time is allowed to be sold in U.S. dollars in Iran, and the current oil that's already en route from the tankers is able to pass through. So these sanctions that were lifted has kind of suppressed the price of oil from going higher. But as you can see, once the strikes started to get a lot worse on Wednesday, so Trump came out on Monday and said we're gonna do peace talks. Then the strikes actually got a lot worse. Both sides publicly put out their terms, which is a big mistake. But because everybody that has a head knows that the other side isn't going to agree to all the terms, that they're going to have to negotiate this, and that they're going to probably argue about it for a long time before this conflict gets resolved. And then the strikes got progressively more serious, not necessarily more volume, but in intent. And then the price rallied very quickly, especially into Friday. So who knows what's gonna happen now from here till a few hours. Anyone could drop a nuke, and it could gap up to 200. But no, I'm kidding. But yeah, like lower prices for oil is definitely, I guess, sorry, higher prices for oil is definitely in the cards. Like it's something that could very well happen. And the markets overall kind of reflect that. Like gold has been a bit stable, not as bad as the dollar ramping back up. Maybe people are buying more gold now because they're scared, but I think it can still have more downside as well as equities, because the dollar could just continue strengthening here amidst all this conflict, and of course with the oil supply um, being restrictive, it may scare investors some more, and they may try and take more profits into things like gold and Nasdaq. Um, you know, Looking at the economic indicators, the first thing I want to look at is the MOVE index, the bond volatility market. Look at where it was back in April 2025 when the tariff situation was crazy. This is basically back at near those levels. It's continued to make higher highs. It's declined, but then it's just continued to make higher highs. So the MOVE index is signifying that there's a lot of volatility in the bond market. A lot of investors are buying and selling bonds. And so these are the yields, or sorry, a lot of investors are selling bonds, mostly shorting bonds. And these are the yields inversely correlated to the price. They've kind of exploded. The yield curve is steepening, so this is getting pretty serious. A lot of cracks are starting to appear. The VIX is back going up again, as you can see from the sell-off that we had this week too. Credit spreads, credit spreads are increasing. This is the like triple C's, and lowest U.S. high yield index, lower U.S. high yield index option adjusted. So I don't know exactly what that part is, but triple C's is like higher rewarding bonds that are more risky. These would probably be the ones to crack first before, I guess the high yields option adjusted ones. This is more like safer bonds. Um, this is basically the difference between treasuries and junk bonds, the yield that investors demand. So like in order for them to be comfortable buying these these lower quality corporate bonds or whatever, they needed to pay 3.21% more than U.S. Treasury bonds. Um, and it's still making higher highs. It's still high. It's climbed to last week 3.28%. It's still high. So nothing has like since last week dramatically changed in economic indicators. Like nothing has been like holy shit. It's just kind of still following the trend, and nothing is at the point where okay, there's panic right now. But there is stress and there is a trend that's going higher, and so we'll just see how that stress evolves in the next few weeks. Um, and of course, we don't have a Fed meeting anytime soon either, so I don't really think people have a reason to fully panic. We're going into Easter, so probably gonna be a calm week again, but this is just what I'm assuming because it's Easter and the holiday week. Um, Not much. Actually, no, even not much. There's a lot going on actually. When it's not a holiday week, it's next week that's Easter, but I don't know. I guess I thought this next week was Easter. I guess it's on Sunday, so I guess it's like an Easter week ahead of the holiday. But there's still a lot of important news, almost like every day. Powell speaking. I don't know what this is about. So he's gonna participate in this moderated discussion at Harvard University. Advanced questions expected. Okay, so maybe this is actually very good for volatility because there people might ask him very specific questions about different things that could cause volatility. But yeah, like unemployment rates, the big one on Friday. I expect the best trading to be at the beginning of the week and then closer to unemployment rate until unemployment rates comes out. It's probably gonna slow down a bit and less opportunity window. But we'll, still opportunity. Anyways, that's really it for this week. I hope everybody has had a good week and good luck next week.